Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. And it's so nice to talk options and the markets. Let's turn on Dukascopy to see the chat line. There we are. So we have 10 this morning. Interesting, very interesting. Now we have 4. Okay. So let's see where we go from here. Let's get going on the. We'll start talking about the different indices, and if anybody wants to talk options, we'll go into options. I don't want to push it on anybody, but I'm always glad to talk about options, and we have a platform we can look at. I see some numbers have come out. The GDP. Let's see, what do we have here? There it is, GDP. What are we looking at here? We're looking at. So what were they? They were looking for GDP month over month was unched, and same thing with month over month. Let's see, 0.196. Let's see what they say on the channel. Oh, there's a C. Cool. Okay, August price index. Okay. Okay. Huh. Oh, I guess inflation is still high. Personal spending. I see. Let's see what they say. Okay, so they figured it. Let's see. August core PCE price was up 0.1% versus 2 estimated. So I guess that's a positive thing that it's dropping. I guess that's how that's looked at. Hey SC, we talked about options yesterday, and I thought we'd go through that a little bit slower and a little bit easier. In other words, when looking at a product, whatever product it is, I thought after I explained that, look at the straddle, and then you can usually guesstimate what the market interprets as where the range will be. And it could be because there's earnings tomorrow, or it could be 3 months out. Now, when they were talking Brexit, I started doing a calculation like that. We were talking about the options a little bit, and I said, oh my goodness, the cable's going to break all the way down to X. And it was really a big move. The options were projecting this giant move in British pound. And within 24 hours, they were there. And so it happens a lot. Matter of fact, it always happens on some level. It's very rare for the option people to be wrong. It's almost like a self-fulfilling prophecy. In other words, they build their positions off of the volatility and the premium of the option. That's part of the volatility. The premium of the option has a built-in volatility, and that's a dynamic number. It's always shifting. And so between the decay and the interest rate, so it's usually those combinations together to create the premium in an option. So it's the amount of time left in its life versus the interest rate itself versus the volatility of how they're trading the underlying product and the action that they're seeing. So it's always a combination of both of those. So binary options, please explain to it a bit in mechanics. Yeah, so a binary option, let's put the trading chart, let's put the, where is it at? Let's put, where is it at? Let me just shrink this for a second. And then go like this. And we're going to put up the option strike prices again. And we're going to use the SPY as an example since it's a very liquid product. Let's say dismiss. There we are. And here it comes. All right. Right there. And go like that. So in the case here, that's Apple. Let's get the SPY in there. There we are. Oop, wrong product there. What did I just change? I'm not even sure what I just changed. What was it? Oh, I see what I changed. Let's fix that. Okay, let's try that one more time. There we are. There we go. I just accidentally punched in the wrong spot. I got to change that again. HO. There it is. All right, now let's save that. Now let's go back to the page here. There we are. Okay, so this is the S&P 500. All right, and you can see it right here. It closed at 428.52. Right now, it's actually trading almost $2 higher at 430.67. All right, now let's look at the options. We can look at they're 78 days out. Let's see. So we basically know at last night at 428. Let's see, that is the call. What is this? This is, how many days is that? That is 3 days away. So let's go and look at some time itself in there. Say the next, let's see, where's it at? 77 days. Let's try that. I just saw 77 days. Where's 77 days? There it is. Okay, so you can see here, and let me just let's see. So 428. We look at the 428 call. Where is it at? Right there, and it closed at $15.81. Okay. Now let's say you want to do a binary. Okay, so let's start you off on how to decide what binary to do. Okay, how's that sound? All right. So what we do is we go with a 4. Let's see. All right, so we're looking at the 428 strike price, and that is, let's highlight it. Let's see. Where's that mouse at again? Right here. Let's highlight it, and right there's the call, and you can see that on the screen in a few seconds here. There we are. All right, so 1581 is the 428 call, and then what we do is we go and look at the 428 put. That's 77 days out also. That's the call. Let's see, is that it right there? That's December, the call. Let's put the put up there. Put only. So the 428 put is at, it's settled at 1049. So call and put 428. So what we do is we add the two together, 1581 and 1049. All right, so that's 25. That's 2630 total together, 2630. All right, that's the 428 call and the 428 put. So we're looking at the straddle there. We give a good rough guesstimation, and it says, 1581 plus 1049. That comes out to be $26.30. Okay. Now we take that and we look at it and we go, okay, $26 basically, and we look at 428, the strike price, and now we're looking at, you add $26.30 to the 428, which comes out to be 454.30. 454.30. Okay, on the call side, and you subtract it. Do the same thing again. You subtract it down, and it brings it out to be. So you're subtracting 26 basically from 428, and that comes out to be 422 or 421.70. Okay, So we're basically looking at 421.70. So we're basically looking at the 420 put in a sense, and we're looking at the 455 call. Okay. All right. Now we have a good idea of what the option market, the volatility and so forth, is looking at. It's looking at it and it's saying, okay, in 77 days, we believe this product could be as low as 421 and change, and as high as almost 454, a little bit better than that, 454.30. All right, now a binary. What a binary is, let's go and look at the cost of the binary. We're going to look at the cost of the binary on the call side and on the put side. Okay? All right, and so what we do is we go on the put side. I guess we have to expand the strike prices because we want to look at the, what are we looking at? Basically at 421. So there's 420. Let's see, let's move this around. Okay, so there's 422. So there's the 422 put. All right, and is that right? No, 402. I'm sorry. So that's 401.70. 401.70. Sorry about that. 401.70. So what we want to do is we want to look at the 400 put. Let's wind that down and let's see, how do we do this? We'll go like this. Just keep on expanding the strikes. And so we're going to show you what we're talking about here in a few seconds. So we're looking at the 406 there now. That's getting closer. All right, so we look at, now what we do is we're saying, okay, this product has the potential to go down to 401. Basically 402, 401.70. All right, so 402. So what we do is we look at the 402 put, which is right. Ooh, we need one more. Let's see. There we are. There's the 402. Let's see. There's 7 days. There's 13 days. We want to go to 77 days. Okay, there's 77 days. There's the 402 put. It's quoted at 448. All right. So the 402 put is at $4.48. And then what we do is we go and look at, say we'll look at, we can look at what it makes a binary is you buy one and sell the other of the same call or put, but different strike prices. Okay, I'm going to say that again. So what you're doing is you're buying, in this case here, you're going to be buying a put and selling a put, okay, of the same month and expiration, but with different strike prices. So let's say we look at the, let's say we're looking at a $5 potential there. So let's say we're looking at the let's do this. We'll look at the 407 put, okay? And the 407 put is traded at 526. So we go, okay, you could sell the 402 put at 448, buy the 407 put at 526, and that is 78 cents. That's it. You're paying 78 cents or $78 on an option. Okay, so $78 on the binary. That's the put side. All right. And now we know that, when looking at the straddle, that it has the potential to go down to basically 402. So you'd be paying 78.78 with the potential to make $4.22. Okay. All right. Now I'm going to get the other side, and then we're going to go back and we're going to analyze that. Okay. In other words, we're going to discuss the process itself. Let's go to the call and look the same way. And in this case here, since we see that the potential is 454 on the upside, we'll look at something like the 50 call, and we'll buy the 50 call and sell the 55 call. How's that sound? And let's see if we can find that. and that's 77 days out. And let's see if we have that. Yep, there's the 50 call. Is quoted at $4.25. 450 and sell the 455. And that's put and put. All right, so the 450 call is quoted at, you see it where the little arrow is right there, at 425. So let's write that in. 425. Now we go and look at the 55 call. 55 call is quoted at 284. Okay, so let's put 284 in there. Now the difference between that, you're subtracting 284 from 425. So that is 116, right? And so 116, so 141. All right, so it's $1.41. Okay. So overall, if we bought both of those binaries, all right, we bought the call side for $1.41. Actually, we could even get a little bit, well, let's just leave it at that. So you put out $1.41 on the call side of a binary, and you put out 78 cents on the put side of the binary. Okay, so the total comes out to be 78 plus 141. So that would be basically 219, I believe it is. Yeah, so 219. So to have the potential of making $5, you would be risking 219. Now you can shrink those down and come up with a little better and tighten it, and try to get it down to say $1 and a change. There's all kinds of potentials there. I missed my bus. You missed your bus? How did you miss a bus? Oh, Robin, you're funny. What do you mean you missed the bus? Did you drop the car off somewhere? Is the car getting repaired and you didn't want to bother Rumi? Okay, so that's a binary. In other words, you would be buying, say, the 450 call and selling the 455 call. That's a binary. Same thing on the put side. Oh, the California senator passed on. Dianne Feinstein passed at age 90. She just died. Huh. Huh. Interesting. All right. So the good senator from California has passed on. All right. Robin says, Diane will still be voting. Yes. Yeah, really. In regular elections. All right. So SC. So what we're looking at is the binary call and the binary put stretched out, and it's priced at $2.19 with a potential to make $5 total. So you subtract $2.19 from the $5 because it's a 50 at 55 and the put is at a 50 is at a 02 at 07. So they're $5 wide in strike price. Follow that so far? Well, I'll wait for you to respond. Huh. Interesting. Poor Miss. She passed. Interesting. So, we'll let you respond there, AC. I'm sorry, SC. Yes. Okay. Yep. All right. So that's a way of looking at a long-term binary. Okay. Short-term binaries can work the same way. We can go and look at, let's go look at, instead of 78 days, let's go look at In this case, we can shrink it down again because it won't be anywhere near as wild. But let's go look at something like, all right, so bring it down to something like 10 strikes. Now let's go look at next week. Okay, beginning of the month action. Dollar cost averaging potential, the whole bit. Now let's look at the spider. Where's it at? 4 days. The third. There's 5-day options. The fourth. Let's see what the end of the week is. Let's take a look at. You can come up with any one of these. Usually, let's see. So the 6th is Friday. The 5th is Thursday. All right. So let's take a look at. There's the 5th. That's Thursday of next week. All right. And then there is the 6th. So what we look at is the 428 call 5 days out is at 424. And we're going to look at the binary of just 5 days. We can also look at you know what? We could look at the binary today. Just to do a 1-dayer. So it expires today. And so here's 428. They have the 428 call with a 1-day binary is at 215. Okay, it's settled at 215. Now let's go look at say the 30 call. The 30 call is at 117. So it's not the best. It's $1, so it's going to get a little expensive there. Let's try a little bit wider. Let's say from 28 to 31, $3 wide. Let's say $4 wide. So we could even look at it in a $5 situation, but let's just look at it in a $4 strike price wide. So from 428 to 432 on the call side. And the 32 call is quoted at 55.55. So that turns out to be 160. See, it's a little expensive. And then let's go look at the put side of that. Where's the puts? Put. In fact, let's see if we do both call and put. There we are. And now let's take a look at expires today. Where's the puts? Oh, let's do it like this then. Let's put in there. Put only. And so the 428 put is at 227. $227. That's the 428 put. And the 424 is at $1.05. So that comes out to be 122. So 122 plus 160 is 282. Okay. 424. There we are. All right. Now, the most you can make out of it is $1.18. Okay. And let's see where it's trading right now. Right now, it's trading at 31.52. So it's pretty much in the money at this point. So we would go and look at the 31 call. And the 31 call is valued at $3.95. Okay. And let's see where the let's add a couple strikes to it. No, I'm sorry, that was the put. Okay, so let's try that again. So let's go look at 1 day, and we look at the 428, 424, and so with the product, see, it closed at 28, and it's almost $3. It's trading almost $3 higher. All right, so we go down $3 on the put side of it. So in 28, we're looking at the 25. So the 25 now is quoted at 71. And let's go and look at the $4 down from there, which would be 21. Let's just add one more strike. And that would be 26. So now that's a 45. Now we paid for that put spread $1.22. Okay. Put spread. Okay. $1.22. And so we're looking at 55 and 75, 77. So you lose 77 cents on the put side. Okay? Now let's go the reverse. Let's go look at, with it up $3, we're going to look at the, what are we going to look at? We're going to look at the call now. Let's see, where's the call at? There we are. So in other words, we were looking at 28. We were long 28. So let's go $3 down. And we're looking at 427 now. So 427. And let's go look at, let's see, so we go $3 down from the, was it the 32? Yes, 32. So $3 down from the 32, which is 29. And the 29 calls at 163. All right, so that's 237, 257, 257, 264. So that's making 264. Okay, we paid $1.60 for that. That's making $1.04. What we paid for on the put side, which was let's see, let's find it again, 160. No, I'm sorry, 120, 122. We're losing 33. We're 22, so 33. So we're where am I? Let me try this again. 122. So it's gone from 122 down to 77, which is 55. So we've lost 55 cents on one side, and we've made, where's it at? $2.64 on the other side. And so that's when you buy both binaries, okay? And that's on a 24-hour period. And you know news was coming out. You know there could be some action in the market. And so that's, you know, we're getting that decent-sized move from that situation. Does that make any sense to you? That is trading a binary. And that's like a 24-hour binary. Does that make any sense to you? We'll give you a chance to answer that. So yeah, did you hear this? Did you hear this before, Robin, about the Dianne Feinstein dying, the senator from California? And SC just double checking to see if that makes sense to you. So we looked at what you could pay for the spread yesterday at the close, and what it's trading for live today, and you can see that it's making $1 and change. Let me just double check that. Yeah, 264, and we paid for it the $1.60. So it's making $1.04. No, I say Robinson. Oh no, you didn't know it either. Neither did I. It's the first I've heard it. So, and that is how to calculate an overnight binary. And then we showed you how to calculate a 78-day binary. And you can see what the risk is and the whole process. Now, you could also go the other way with the binaries. You can sell them. In other words, you could be, investing in the sense of the binary, knowing that you have a limited risk, and you sell it. And then you let the decay. In this case here, when you know it's going to be volatile, you want to buy it. When you think that it's not going to be volatile, you want to sell it. And then that's how our algorithms come in and adjust the whole process at the same time. I'm just waiting for SC to say that yes or no. What we can do is we'll stop there and start looking at the dollar and so forth, and we'll go through the algorithms, And what we do is tomorrow, what we can do is we can look at how we use the algorithms to decide which direction to take when putting on binaries or putting option spreads on. Okay, good. Excellent. I hope that made sense. So I think what we'll do is we'll label this webinar How to Price Options Without a Computer, or without a computer model, just by looking at the closing price. And so that is the way you would try to price for an action to come around the corner. And you would assume, since what was the original price on the spot binary? The spot binary was let's see, so it was $1.60 and $1.22. So that was you add the two together, and that is $2.82. And so the potential in there was to $2.82, and that was the potential in there was $1.18. And so far, the product has made something like almost made half of it at this point. A little more than half. Like I think it's at 70 some odd cents now. So you can take that off and walk away. Let it expire. You can play any one of those games. But in the end result is that it's turned into a winner, and so you want to just take that off. And that's when big news is coming out that moves markets. And you buy a binary combination, a binary straddle, and you play for the action. All right, now let's see. What did I say? I was gonna label this how to price. Let's see how to price. Cancel. There we are. How to price options, option binaries. And tomorrow, or on Monday, we can go in and look at how to use the algorithms to decide which side to be on. Let's see. So I'm going to put that in there now, title-wise, so we kind of don't have to think about it twice. And then what we're going to do now is we're going to go look at the dollar index. And you can see, let's minimize this, the dollar index. Let's see. Kind of like that. There we are. Now you can see the dollar index is moving down today. And that must mean that interest rates are dropping. After all these, weeks, they've been pushing up, and we've been talking about that, and markets are interpreting, future events. Let's see. Option binaries. Option binaries, or how option binary price figure. Let's see. Option binary price discovery. How's that? Not sprint. The option binary price discovery. There we are. The option binary price discovery. That's what we're labeling this webinar. There we go. All right. Now let's jump over to the technical analysis side of all this. The algorithms. What we do is I will try to give you a little flavor of it as we go through this all again. So in other words, when we go over to here, we go into the dollar index. That's the not that one. We go to right here. You can see it up on the screen. You see it through our newer platform, our beta platform we're working on at the moment. And then you can see it right here. You can see it on Ducoscopy. You can see it breaking down, doing the same thing as right here. You see the weakness right there. You see the weekly holding up pretty well still. Go over to here. See the same thing breaking down. And you can see the weekly holding up. Now, in the case of here, when looking at the options and how to choose, how to choose which direction to focus in on. The best way to do that when you're not looking at the volatile news coming out the next day type of thing, or next couple of days, the best way to play this is looking at the weekly. You would, in this case here, when it goes into a weekly buy, you put on a bullish binary on the dollar index. Okay, you don't put on a put side, you just put on the bullish buy side and let it do its thing. And you can see it runs up, and you can take some profits. You can put a couple of them on and take profits of some. And then when we go into a daily sell, you can go sell an extra call and turn it into some type of neutrals position. And so then when it goes back into the buy right here again with us in a weekly buy, you can put on the bull spread, take off the one you sold, and this way, not the spread, just the extra option you put on, and you can just play it that way. That's how we use our algorithms to choose directions instead of having to buy a straddle, because we're looking for volatility. In this case here, we're looking for direction, and that's what the algorithms we have here, I created them for that specific reason decades ago. Now we go over to the euro, and put the euro in there, and we'll see the action of that. You see that it's trying to climb into the buy today, but we're in that weekly sell, so you do not put on a bullish one, that's for sure. But if you would follow the weekly, and then when it goes into the sell, you put on the put binary, you see it would make money. Same thing here. Put on the put binary, it makes money. Put on the put binary, in this case here, it just breaks even. It loses a little money. And then this one makes money again. So 3 out of 4 make good money. And when you have a limited risk factor with the binary, you don't have much of a problem, especially when you're trading like a 5-day binary or something of that nature, or a 10-day binary. And so that's how we combined our algorithm with the option trading itself. Okay, now from there we're going to jump over to the GBP. Same situation. We've been in a weekly sell, so every time we go into a sell, like right here, you would put on the put binary. You see that it breaks down. Same situation here, it breaks down. Doesn't go perfect. You got a day and a half of firmness, and then the next thing you know, it's money's in your pocket. Same thing here. 3 days go by, it's trying and trying and trying, it's going up and down, and next thing you know, bang. And I like to do like sometimes I'll go 3 and 4 weeks out, as far out as 6 weeks in a spread, or binary. Now you can see here today they're playing with the daily buy, just like the euro is playing with its daily buy. But we're in weekly sell, so one thing's for sure, you don't want to be short term because of this, especially if it closes up in here. And at the same time, you don't want to be long because it's in a weekly sell. We need this to turn up to change the direction of it all. Does that make sense to you, SC? And Robin obviously already knows this, and I already know this. Now we'll go over to the Swiss. Same situation. You can see here the Swiss. Let's put it up on J4X too. At the same time, there is the Swiss right there, and as you can see, this product's doing the same exact thing. It's making that type of action. This is the Swiss franc, the dollar Swiss franc pairs trade, breaking down into the sell like everybody else after being in the buy. And if you had played the buy side, well, this was very interesting. There was one buy right here, and it kind of went up, didn't make too much money at all. And then the second one was the scream. It screamed its way through. So that's the way that our system works, and that's the way we follow our algorithms. And now you're seeing how we use the algorithms with binaries, or in call side or put side, or when it comes to the straddle, buying a straddle binary, it's mainly due to we expect more noise, and we set it up. How do we set it up, traders? By looking at the straddle itself. Just the straddle itself, the call and the put. And then we figure out how to put those spreads on from there. that gives us a general idea of how much action coming. So if there's going to be an announcement, earnings on a stock, a big financial like a GDP or a major news thing coming out, you look at what the straddle is setting up, and then you can go, if it's really big, then you want to be involved in it. You're willing to take the risk of being in a put and call binary on a straddle situation, because you're only playing for a 24-hour period. All right. So from there, we go over to the yen. And there's the yen. You can see the yen still trying to hold up relatively well. It dropped down to the 48s and is back into the 149s again. And you can see we've been in that weekly buy for a while there, like so. And then from there, we go over to, we'll figure it in a second. We go to the Turkish lira. See what the Turkish lira is up to. See, it's trying to get into a buy also, which is kind of bearish. But it's trying to get in a buy, and you can see it's in the weekly buy. So maybe for some reason, as the dollar, before, in other words, you would have thought that this would be going down, but it's losing against the euro. So, there's pressure on this product, and like we said before, we're afraid that it's going to keep on trying to find the 30s. We don't believe, we don't believe that the product can stay down for the next 6 months or so. We think that it's going to find ways to go up, which means it's going to lose. When it goes up, it's losing when it goes up, not gaining. All right. Now, SC. Does that make sense? How to, when you're looking at our weekly signal with the daily signal and you put the binary on, you've limited your risk. You're not going to get stopped out. And you can hold on to the position for 2, 3, 4 days before it finally comes to fruition. Sometimes it happens overnight. And this way, it's a pretty safe way to trade without getting stopped out. Does that all make sense to you, SC? All right, I'm taking sips of my tea since we're burning daylight here. We only have about 11, 12 minutes. So from there, we slide over to the South African Rand, the number one brick. It's showing a little bull sign for the metals. You can see yesterday it was down. Today it's down. Now it's trying to get into the sell. Unfortunately, the weekly is trying to go into a buy. Excellent. Excellent. Thank you, SC. I'm really glad that you've asked these questions, and I'm really glad we're looking at them. And each day, as we look at them for a half hour, we'll get deeper and deeper into the understanding and the way to price it. I try to go slow. I try to be accurate. Since I'm talking and calculating, I maybe should use a calculator, but I'm always doing the math in my head anyway. But all right, now South African Rand. So with the let's put the South African Rand up on J4X. Right there. You see that pressure on it. 2 days in a row of pressure. And let's just turn off the hinky for a second. You'll see the 2 days. See there, there, and there. So we would assume we're seeing strength in gold today. So let's go take a look at gold. And there's gold. And you can see today it's starting to bounce. Yesterday it did not bounce, but today it's trying. But we're still away from the daily buy. We're away from the weekly. And that's not exactly, something positive. Maybe by the end of the day, we even see a higher price, especially with the interest rates starting to dip a little bit. Now let's take a look at silver. And I like that. Nice. I agree. Oh, look at silver really taking off today. It's I heard a TV commercial about silver is undervalued because of the electronics or something like that. So, I guess, on some level they're reaching for the silver more than they're reaching for the gold. But we're underneath that weekly, so I don't believe they're going to take it any too much higher. It's going to take a lot of work to get it out of that weekly sell, that's for sure. All right, and looks like we're going to be stuck in a neutral position if it closes in a daily buy and a weekly sell. Now from there we go over to the copper. Copper's showing strength again. It finally went into the buy there, going into this morning, looking at the exchange prices. So it got into that buy. We had a little green line on the side at one point for today, but at this point it's running straight through it. So we're seeing a second day of buying, and you can see it's trying to get into the weekly here, right there. And then from there, remember you can do binaries in all these products. Let's look at platinum. There's platinum doing the same thing, trying to get into the buy. And you can see here, it's so far down on the weekly, it's awful hard to want to take a shot at it. You know, in other words, it's stuck in a neutral situation. Now from there, we go over to the energies. Let's go to Canadian. And I think what I've seen with the Canadian, right there, you see, and let's take the hinky off for a second. Hinky off. Hinky off. There we are. You can see for 3 days it's breaking down. You would assume oil is moving up. So we're going to turn that back on again. And let's go take a look at oil over here. And what we'll do is we'll put Brent up. Let's put Brent over here. Yep, there's Brent. You see it's in daily buy for 3 days. And you can see it's been in a weekly buy for, what's that, 6 weeks now. It's in a weekly buy. So you see that pressure on the upside on the Brent. Let's take a look at it over here and see what the West Texas Intermediate is doing. There it is right there. You see that it popped the first day fine. Second day failed, and now it's trying to turn again, but it's still in the daily buy now for going on a 6th day. And it's been in a weekly buy for 4 full weeks. This is the 5th week fully. And so we're seeing a lot of strength in there. And the Canadian, as you see on the chart there, is heading down, and that's the way it normally does. It heads down, and usually the energy sector finds a way to go up in value. Now, from there, we'll go over and look at natural gas. And there's natural gas. It climbed. It also jumped into the daily buy at the end of the day yesterday, but it took a little while for the exchange to catch up to it. And you can see here this morning, it's down a little bit, and the weekly is still in a weekly sell, so you can't take the long as much as you'd love to do a bull binary with a weekly sell and a daily buy. It's a neutral position. Now you understand more when Doc says it's neutrals, because I won't get into any side of it until we get into the next. You know, both are in the same direction, the daily and the weekly. And then from there, we're going to take a look at the energy company in Europa. Let's see, where's it at? Let's just take a look at it from here. And there is the Spanish energy company right there, trading at almost basically 26 even, which is nice. It's been playing the low end of the range. And let's go find it over here. There it is right there. You can see there. Oh, look at that pop it's doing. So it got down to under 25.5 yesterday. So they was at 25.30. So they really pushed it down, and they're almost $1 higher, 70 cents higher than yesterday from its lows. You can see there we're trying to turn up. We've been in a daily sell there. You can see for, let's see, where's it? Let's open it up over here. You can see it's been in a daily sell since up in here. It's slid all week, and then you see today it's trying to turn up, and we're starting to see some strength in there. So the product is, fine. This is an energy company down in Spain, and when they're going up in value, that usually means natural gas is rising. in Europe, and when they're going down in value, it means that they're selling the natural gas in Europe. So we are in this situation now where it's having a little hard time trying to figure out if it's coming or going. Let's see what else we got going here. I see. Oh, what Robin says. SC, have you logged into your beta test? Oh, yes. Get connected up to beta. That'd be nice. All right. So from the natural gas, we'll go over and look at the stock market. Let's look at the stock market. There's the S&P 500 or the SPY, SPY. You can see here trading at 4,365. It's been in a daily buy for a third day now. And, there's a little strength more. I'd like to see the weekly join in. So far, it's not happening. Let's go over and take a look at Tech 100. There's Tech 100. Oh, you're not seeing the other one. We'll go back to it. There you go. So there is Tech 100. It's been in a daily buy for 3 days now, but we're still in the weekly sell. So we're a little frustrated that it hasn't found a way to get the weekly buy up yet. Let's go look again at the S&P 500. It's the same situation. Matter of fact, we had a red and a green, and it dropped underneath the zero line, and now it's back up again, but we're still in a buy because of the red and the green, and then we expected today to be firm just solely because that's usually the rhythm that happens when it stays like that. But you can see here the weekly is not really moving up. Let's take a look at the Dow Jones Industrial Average right there. And there is the Dow. And you can see it's trying to lift up for the first time. It's got a green and a red, and the weekly is still in the minus, so there's a lot of pressure on this. And then from there, we're going to go look at the Russell, because we really feel like the Russell is a real indicator of future events in the market in general. So you can see here. Let's see, what is that? That's a September contract, isn't it? So we need to put the December contract in there. I didn't realize that. Let's see if I have it over here too. I'm going to see what they're doing on this. I know I have the Russell in here somewhere. And we'll have that up there first. And then I'll switch the futures contracts over. I think that's it. RTY. There it is. And you see it's trying to lift right there. It's been trying for the last couple of days. It's been selling off for days here since up in here. Now, let's see. It's at 1825 at the moment. Let's put the contract. Yep. There we go. There it is right there. Now let's see, it's showing some strength today, but it has been battling on the other side of it all. So Z, there it is, Z. It's been in a daily buy there for a couple of days. Interesting. There it is. So you can see there, close. It's not in a weekly buy yet, but for the last 4 days, it's been in a daily buy. Fascinating. I'm a little surprised this hasn't picked up on that. Let's see, that there. And a sell down. That was a sell down 4 days back, right? Yep. So that's why. And then we're going to have to go to the exchange and see. Then it goes back up again there. And then that's there. So this right here is a sell, and this was a buy. Interesting. All right, so very interesting. And so that's I'm looking at over here. Let's do it over here. That's what that is. Okay, so we'll have to double check that all, but it's really trying to show strength. Not yet, having some hiccups with the account login. Okay, yeah, Robin will help you out. All right, traders, we're out of here. This is Doc from North America. Catch you all on Monday. Everybody have a safe and smart weekend. And we will see you all on TGIM. Thank goodness it'll be Monday. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, later, traders. Safe and smart.